We also have Feroze Azeez joining us now, Deputy CEO, Anand Rathi Wealth. Feroze bhai, thank you so much. Budget day, busy day for you, but you took out time. Grateful for you to have joined us. Tell us, what are your and how are the markets viewing the budget? Rakesh here was saying that it's at the cusp of politics and economics. Do you see any economics in the budget at all?
Yes, a lot of it. In fact, see, I'll tell you from an investor standpoint, especially from asset classes standpoint, I think it's benefiting. It's going to benefit both of them. Let's start with debt. Of course, the fiscal deficit prudence is going to first manifest itself into the yield softening. Yield softening means that from a global standpoint, we were meritorious investment destination because of our interest rates being low and our inflation being low, unlike the globe. So we were getting a lot of money, like we got 62,000 crores in December from foreigners because we were standing out on these two counts. So we further become better on the two distinctly different thing for a large economy like us. So that if that were to happen, inclusion in the global bond market index will bring down the yields on the long end of the yield curve to almost about 6.5 by the time the next budget is read, if the government continues. So that's a great news. If 0.5% to 0.7% softening on the long end yield curve happens, there is a PE re-rating, or at least the fair value re-rating happens on the equity side by about 1.5 PE. So which means that whatever the rally you have seen from October 26th, which was the expiry of October, from 18,850 to almost about 21,700, gets solidity. And today you can say more confidently that it is fairly valued. From a little extra froth, the froth is vanished because yields are expected to come down to 6.5. And the third part, which is inside equity, you had small caps having done very well, mid caps done okay. So that was skating on thin ice, because if there was something bad for the economy, there could have been a sell-off, and that's where people lose money. Portfolios depend on the broader market. I think that has also got solidified, because FII looking at this will say this was a true to label vote on account budget, simple and not so populist. So I think all three counts from an investor portfolio impact standpoint was a deep green.
And specifically from a portfolio standpoint, what are the themes that emerge for you? What I'm reading, and correct me if I'm wrong, Feroze, is there is an energy transition theme. So you're talking about solar, and we're talking about wind, and we're talking about biogas. There is an agri incentive. There is definitely a technology incentive. And is there any other theme? And there's, of course, the infra play with an added 11%. Any other theme that really sticks out for you right now?
So I think every business which has some correlation to housing, I would definitely be bullish on it from a structural 1 year, 1.5 year standpoint, because 2 crore houses will have a large benefit on cement, steel, and other businesses which support housing. And that is, housing is the place where the maximum multiplier comes through from an economic standpoint. So that's point one. Point two, I would certainly say there are some other sectors which have some degree of emphasis, but they are not as structured. From a capital market standpoint, you can't participate in a very diversified bouquet of listed stocks. So that's where transitioning the effort of the government to rupees in your portfolio becomes very difficult in sectors which are still emerging and creating their foundations, like energy, especially the green energy. It will take some time for you to be able to make money out of it.
Make multi-bags out of it. Well, Feroze Azeez, thank you so much for joining us.